Hello, Warriors. How's everyone doing? It was good, Simon. Thank you. Hi, Alexander. How are you? Thank you. Sinatra, Michael, thank you. Okay, whomever. Brand. AJ, how are you? Glenn, Kman, how are you? Teammates, Kurt, George,
Welcome back,
Saloom.
Dale.
Welcome
Thank you.
back, Dale.
Thank you, guys.
And
Good
happy
to be
birthday.
back. Good to be back. Good to have birthdays. The alternative isn't real enticing.
Yes, happy birthday yesterday.
Yes, yesterday. It's my party. I can cry if I want to. But I'm not going to cry because we only have a few days left to make May pay. Right, guys? Who's making May pay? If you're not, and you're out there right now, I tell you what.
I'm
we have
paying May a little bit.
All right. You know,
telling you.
all right, good. So, you know, what I'm going to say to our community today is, you know, we have that sale going, our summer sale for our memberships. And anyone who takes a quarterly today, I'm offering a free Skype consult. So, Tiffany, why don't you go for it? And just, you know, if you join, let the team know, and we'll get the Skype ID to you, and we could talk about anything on your mind. Okay? So that's good for today. And team, great to be back with you. You know, I was watching things out of the corner of my eye, and I thought you know, the service that I use on my phone, it looked like the euro wasn't even trading. You know, for days it was like at the same price. And then finally got to move. So here we are in the dollar. We're right there at a trend break. So we'll see what happens here. I think eventually we'll break it if we're not, you know, could hold it and make another run, but it looks pretty heavy, like after you take a vacation and you eat a lot. So Dixie, Ryan, am I, you know, off base looking for a trend break here and maybe the beginning of something a little more serious to the downside?
Well, welcome back, mate, and happy
Thank
birthday.
You, Thank you.
And unfortunately, you're at that age where candles and a cake becomes a fire hazard. I assume.
Yeah, well, I had my fire extinguisher with me, man. So anyway,
yeah,
you know what's even worse is birthday spanking at my age, and I had to call 911 a few times. All right. Anyway.
Anyway, moving on from that one.
Yeah.
Yeah.
All right.
Well,
So look at that.
Your Dixie. I know your Dixie. You've had that 103.80 level in your radar for quite some time. It's a big old level there.
Yeah.
That could be in danger if we crack 109 in the euro.
Okay.
I think we're probably going to be heading down to that level. If it, you know, it could be one of those perfect moments where your Dixie level coincides with you know, that big level in the euro up at 109. Maybe even a bit higher. Maybe that 109.50 could get a look in. But yeah, we're on the cusp of moving again. Cable's just running up to 128. Well, you can stay on euro sterling there. That's still
So here we are.
You're running around the charts now.
Yeah, I mean, you know, here we are back at major support. I think I saw something that you were trying it down here to see what kind of bounce you'd get, right?
Yeah, I've been trying it. Everyone's trying it. I'm getting a bit worried now because a lot of people are getting on this one, and if there's too many eyeballs on it, it becomes a big fat target. But it'll be what it will be. It's holding for now. That's the main thing, and see how long it holds for. I'm backing with stop reverses. If it does break, I'll be trying it on the other side. But at the moment, cable we're inching up towards 128. You know, we made a good bed at 127 after the break there, and 128 is the next level. As you can see, going back, we've had a few goes up there, and before that, you know, that little breakout that you're pointing to there. But we got back below it, and then we held it back below it. So 128 is going to be a big level, and so 109 euro dollar, 128 cable. It's all lining up for your Dixie, mate.
Yeah. Okay. So we'll see. I mean, that could be. You know, I'm looking for a pretty big bear market in the Dixie. I know we're talking micro here, but you know, if you want some
it could be one of those watershed moments. You know, if all these levels start cracking, then at once, then maybe we're going to get a big move. You know, if euro sterling goes as well, you know, then we could see quite a few pairs suddenly making another move.
I mean, I'm thinking we're going to get a test down here at major support, you know, par 50 or so. And then a breakdown. If you just measure the formation from 107, that gives you 92, 93. But you really should measure it from here. I mean, wasn't this the break? And then all we've had is consolidation for over a year.
Yeah.
That's all it looks like is consolidation, which implies a trend continuation move. So I think the dollar is going to have some problems. I also noticed when I was away, you know, we talked TLT once it got back inside the wedge here, and that 92 was a real big area. And look how, you know, we just can't get a breakout yet. It's right around that line, being contained by a 200-day moving average. My bias is for continuation to the upside. I'm not looking for this anymore, but you haven't had the confirmation yet. Guess over this 200-day would do it. 92 closes would do it. So we're going to come in at 91.13, and you know, looking at the 10-year, I still think this was important, and this could be some type of failing rally in here. That this is going to go lower, and that's going to be the catalyst initially for the dollar decline. Yeah. Hi, Abel. Yep. So you know, the yen's been grinding. So let's go to Mr. Yen, our version of Mr. Yen, which is Kman.
Oh, ohayou gozaimasu. Good morning in Japanese.
All right, buddy. Where do we short this thing?
Oh, that's a good question. If you look at the dollar yen, it's hesitant. Let's put it that way, because of all the dollars are a little off. Which is, by the way, the direction, not specifically in dollar yen, but the direction for the dollar, which should see the major month-end flow. So just giving one away. The models are calling for a little weaker dollar into month-end. Perhaps we are already trading parts of it. As I was saying, the dollar yen is hesitant, but then UEDA is still not giving us enough to really start to buy yen, because if you look at the yen crosses, they are still running and they are still bid virtually across the board, really. They're all still very bid, so that is likely going to perhaps underpin the dollar yen at some point. I don't want to try even in the dollar yen, but if you look at the yen crosses, they're still running away. And we were talking about actually the Bank of Japan this morning on the Flow Show, and looking ahead to what may happen in June. And where I said a couple of times that the currency is looking at a currency as well. So, and then we were looking at the potential effect of if they would hike rates surprisingly in June because of the currency, but that would be seen as a bit of a panic move, and perhaps the support that the yen would have from it may be very short-lived. But the dollar yen is hesitant because of all the dollars. So if you want to try it, around 157, be my guest. I'm personally not interested in going long yen for longer yet.
Yeah, I think I may try it this week at 78.6.
Where is that?
That
158 or so? Or
yeah, it's in the eights. It's
yeah,
850.
yeah, yeah.
Wrong over the high,
Mm,
something like that.
yeah. It looks to be dollar yen now looks to be more of a tool to do all the rest, because we've briefly touched 157 again. It's coming off, but the rest of the dollars are on the defensive today. As Ryan already mentioned, cable close to the 128, euro looking at this 109 again. And the antipodians are pretty well beat. Aussie, Kiwi, even the Canadian dollar is beat. So yeah, looks to be a week where the dollar could suffer a little bit, in my opinion.
Yeah, so I look at this, and you don't have to be an Elliotician to know if something's impulsive. It's just that it gets from point A to point B in a hurry, in a heartbeat, in a straight line. And then what follows here looks corrective to me, some type of ABC. It's correcting this overbought position in, time and price.
Yeah.
So I think it's worth a shot up there.
It could be because, as well, if we get some more hints that the Bank of Japan may do something to try to help out the MOF, we will have potentially some speculation into the meeting, right? The meeting is on the 14th of June, so still a bit to go, a good 2 weeks to go. But you know how a market can react and try to go ahead of everything.
Yeah. Blake, I know you and Ryan were talking about 136 as being real important in Canada, and you got that nice pop. I mean, 150 point pop off it. Are you going to trust 136 again?
I think so. And it's coming off last week too, which I found really interesting. We had, I believe it was on Friday. We had
it was Friday.
Yeah, well, on Friday we had Canadian retail sales super weak,
and
the dollar CAD surprisingly, just continued to slip. And then also, if you take a look at last week's, I think it was on Tuesday, the CPI data out of Canada, also below expectations. And here we got the Canadian really strengthening. So I'm kind of in the camp with what Kman was just saying. I think a lot of the end of month flows are going through right now. So you're seeing that dollar weakness just kind of, it's bleeding through the market, but it could continue. But I think you got to use this as an opportunity. Now, finding that place to be on the long side on some of these pairs, like the dollar Canadian 136, I do think is going to hold, but that doesn't mean we can't probe it. I mean, things get a little messy when you start, taking out support levels and, here we got end of month. So you could see stops below 136 getting triggered, sterling stops above 128 getting triggered. All that can happen when you're at end of month and the banks just don't want to get in the way. So I think this is a really key level. I think you got to be really focused on price action around here versus just kind of sticking your neck out because it's 136. You know what I mean?
Okay. Yeah. Once we get past month end and some micro stuff, don't you think it's possible that we have something like this from here, if we take out support, that we could end up putting in this type of decline?
I think that has to do a lot with US data, right? I mean, we've got I don't know if there's data this week that's gonna do it for us. I mean, we do have GDP. It's advanced or not advanced. I believe it's preliminary.
First revision.
First revision. There we go. Thank you very much, Ryan.
PCE on Friday.
And PCE on Friday. Maybe that's the data the catalyst that drives the dollar lower. We would need some weaker data here in the US. But even you go back to last week, our PMIs out of the US were strong again, so it's like, maybe this is the week that the US economic data starts to really show some signs of weakness, and that we're going to need in order for the dollar to really have a broad-based decline, I think. but who knows? You know.
So I saw, one of our members at communities joking that I was on vacation when we had this stay here in the S&Ps, that it fought its way back from that big
You
reversal up
did.
here.
We thought you were going to be this major catalyst that I used to be. But let's face it, Dale. None of us really matter because
Yeah,
because the market goes straight up no matter what for the last 10 12 years, aside from COVID, obviously. But aside from that, I mean, the markets just go straight up, so it doesn't matter who you are. If you take a vacation, it doesn't really matter anymore, it seems like, because the markets just don't go down. But hey, I remember a time, and I'm old enough to remember a time when there was two-way price action, and I have a feeling we will get there at some point in our lifetime.
Do you have any upside targets or levels that you're looking at, fib extensions, etc.? If these aren't
for the S&P?
Yeah.
Well, I'll take over the charts, and I'll unless there's something else that you wanted to see.
No.
Okay, yeah. I mean,
I think that's just
it's pretty simple from here. I think it's very, very, very simple as far as analysis goes. There's no reason to be bearish, obviously, right? I mean, there's just zero reasons to be bearish while you're above 5280. Now, that doesn't mean that the market can't roll over. I'm just saying that from a trading or a technical perspective, I don't want to see the monthly chart. I don't know. I just did that. Here's the weekly chart. So from a trading perspective, while you're in breakout territory right here, there's like zero reason to be on the short side. We broke out 2 weeks ago. Last week we dipped and held the breakout point, and here we are holding the breakout. Now I would be bearish if we broke last week's lows, which would be, I guess we can go back and take a look. I think it was just below 80. Well, this is for the S&P here. You know what? Let's do it this way. So if you take like the E-minis and you just look at last week's lows, that would be 52.72, right? So as long as we're above that level, there's no reason to be bearish. But if you're looking at the S&P like CFD 5250, while we're above there, no reason to be bearish. And we broke it, and then we popped right back and closed back above it. So it was a false breakdown, you could argue. So the next levels are the 127% extension, which comes in at 5380, and then after that 5500. Now we have to get back below last week's lows, and if that happens, I think the whole dynamic of the market shifts. But I mean,
there are some warning signs like there have been over the last 20 years.
All right,
yeah, but there are some.
I'm glad you threw that in there, Dale. I'm so glad you said that.
They're buying, rotating into defensive sectors, utilities and staples and that stuff. And then Helene, who has a sharp eye, said that the trend reading last week before I left was the lowest in 30 years. I know it's just one thing, but it when something hasn't happened in 30 years, I pay attention to it.
Right. Yeah, no, I mean, and I have to, and one of the things that I want to make sure that everybody sees here, this is a pretty big deal. It hasn't been important for now. Doesn't mean
the 1 millionth divergence.
Well, divergence is one thing, which is obvious. But look at this rally and look at the anemic volume. So you can see how strong the volume was on the selling volume. Oh, geez,
that is a great point.
Yeah, I mean, like the selling volume that we had was high, and then the rally just over the last 2 months has been anemic, like really dropping off. I mean, there was some volatility there while we were below the 50 DMA. But then look at the last several weeks, and even let me move this
strong up. Big volume precedes price. If people, that's what Blake is talking about. So, having strong volume on the down and even negative volume, even though it wasn't big on the recovery, is a message, right?
Yeah, and I mean, look at the down days and look at the volume on the down days. I mean,
Yeah.
it's just it's really really quite staggering. So that's worth noting. I mean, you can see that the day that you were on vacation where we dipped back below
Yeah.
52.80, the sell off, the volume there was quite aggressive. And then obviously we bounced back, but volume has been just dropped off. And I mean, that, in my opinion, is like one of those things that you can't ignore it. That's why if the market actually does reverse, like let's say we do see a bit of a sell-off, maybe it's sell at the end of May and go away, right? We are at the end of May. So maybe we actually do see some selling. There will be a very big argument to why it would continue. Divergent relative strength, leadership of this, that, and the other thing, volume has picked up and, volume's anemic to the upside. You're going to have a lot of arguments on why stocks are going down if they actually do go down, but it's still a big if. We're still in breakout territory. So it's like,
especially if yields, Blake, we get another leg down in the 10-year.
And that's the thing.
That's
Yeah.
possible.
Here's the thing, and you know this, Dale, obviously. Every week I meet with Jim Welsh, right?
Yeah.
I've been doing it now for the last couple of years, and I'm glad, and I'm thankful that you introduced me to him, or us to him, not just me, but the whole community. He's great. Doing interviews with him every week on Trader Summit. Jim Welsh, if you're not familiar with who he is, he puts together, a narrative and, yada, 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 every week. But one of the things that he's been like really leaning into is the US dollar, how it will weaken, and it's going to weaken substantially. And I haven't been able to get behind that. I'm like, I don't know. And he's like, but he also believes that stocks are going to come down too, because US economic data is going to really slow. And what was interesting, and the reason why I mentioned this, Dale, is I believe it was like yesterday. It was yesterday morning. I was drinking my coffee, Memorial Day, and get about ready to start cleaning up the house as we had visitors yesterday. I was watching a Jeffrey Gundlach interview from Double Line, and he mentioned the same thing. He said that I'm really prone to staying away from correlations that have driven this market the last 20 years, and one of them was how U.S. economic data. Now he's been expecting a recession too, so just make sure that we're all clear that he's been. He even noted it, like I was looking for this recession, never came, blah, blah, blah. But he's like, he believes there's a big recession coming, and he believes that the dollar is going to weaken, and where typically the dollar would strengthen when there's, a recession. There's not going to be that flight to safety this time around. Yeah. And, maybe that's the case, and maybe that actually does take place, which would be a big departure from what we've seen.
So maybe the rates off as rates coming down happens during a risk off phase and a weak dollar.
Exactly. And that's the reason why I wanted to bring that up, is because you mentioned rates, and I think that could be a really big catalyst. If you see, you see the bond market really rally, because I think Jim Bianco has coined the TINA, there is an alternative versus, you can get yield in the bond market. So buying bonds, yields come down. Come down because economic data is bad. The dollar actually suffers, and maybe that is the predominant catalyst that drives the euro above 110. And I don't know why that we're going to get a breakout. This is the obviously the consolidation that I'm paying close attention to. Like, I don't know what's going to drive the dollar, or the euro above 110. And maybe that's it. Weak economic data, stocks come under pressure. No one wants the dollar. Everybody's buying bonds. Yields are coming down, and gold's ripping. The euro, rallies to 116. I don't know what the catalyst is. I just know the technical breakpoints where they are. Yeah. And I'm not smart enough to try to figure out exactly what the argument is at that point in time. But based on obviously what the information that we have, and reading analysis and taking in other economists and what they have to say, maybe that is the reason that you see a significant weakening of the dollar moving forward. I can't really argue that point right now, you know?
Well, emerging markets are betting on it because they're outperforming.
Yeah.
And so are European markets outperforming. So I think there's just money flow to outside the U.S. And let me ask you this: if you saw what was going to come, what's coming here in 5 months or so, this instability that we have
Oh,
about
and with the election, yeah.
yeah, wouldn't you think, it might be a good idea to move some money out of the U.S.?
Yeah, I mean, that's a huge risk. Speaking of which, today we might hear. I think it's the closing arguments for the hush money case, which is going to be a big deal, guys. I think it's going to be a big deal because it's we're gonna find out if it's basically going to be a slap on the wrist or he's found guilty, and is
regardless,
he becomes a felon, because that's going to change the narrative of like the presidential,
there is no narrative.
True. I'm talking to his narrative, but going back to what Kurt just said, he said just trade price action, and I agree with you. It's like I sit here and but that's the thing when you see like the markets develop, like you got the euro, and the euro's breaking out bull flag pattern, right now we have to be respectful of the resistance at 109, and that's one of those things that if you're inside the ForexAnalytix community, we've literally written down the range in the euro to be 108 to 109 all week last week, like literally. Because this is done every day with we do this with if you are a ForexAnalytix subscriber, there's a little button up here. It says webinar on air face, right? It'll say webinar on air morning edge in about 45 minutes. You click on that link, and then we go through all of these. We're going through all of these instruments plus and then some. Steve and I do, but every day 108 to 109 in the euro, and we're coming up toward the 109 level. And the fact of the matter is a break above 109 is bullish. I don't know why. I don't know what the catalyst might be. I don't know if it's end of month. I don't know what. I just know that a break above this 109 level is going to be really bullish, and that's the point. I think right now. Now finding a narrative behind it, and what's the catalyst driving it. We try to figure that out, obviously, and I'm trying to grab my green line, actually, is what I'm trying to do here. We try to figure it out best we can. But yeah, fact of the matter is that's where the money's going. And, a move above 109 would be really quite bullish, I think, in the market. Hey, we only have a couple of minutes, and I'm sorry, we went on and on and on. Dale, that's the problem when you come back from vacation. We have so much to catch up on. I want to ask real quick, Ryan, what are you thinking going into this week? What are you really focused on this week?
Well, we've got a bit of inflation data out from the Eurozone, so we'll see whether that's going to indicate anything past this June cut that we're expecting. PCE as well. There was a Timmy Leaks piece out saying that the core could be a bit higher than what the market's looking at, so that could make it a bit spicy.
Ooh, I didn't see that.
Obviously, we've got some elections this week as well to keep an eye on, Rand, MEX. So yeah, lots in the pipeline.
Yeah. Speaking of which, Kman, since you're here and we're about ready to switch over, we do have the South African election. Actually, I think voting starts today. Now that I'm thinking.
Well, this evening for you guys, yeah.
Yeah.
And yeah, but we may need to wait for a bit for the results. It seems like the boom bust line for ANC is 40-45%. If they get down to 40, they may need to side with one, but they are hoping to get more, not to have to go in C with too many parties they wouldn't like to.
But what you said, the boom bust line is 45%, but
40 to 45%.
Don't they need a 50% for majority, or am I wrong there?
Hmm?
Don't they need 50% for a majority?
Yeah, but I mean, it is kind of expected that they lose their majority, right? I mean,
Right.
and above would be a bit of a surprise. But then it will depend on the coalition. There's been a lot of promises made, and not sure if they are going to be able to hold them. But yeah, we will see the result. I'm still of the same meaning that or the same idea that anything closer to 18 is probably going to be bought on the dollar rand. And yeah, spoken about it on the Flow Show too. We had somebody from South Africa commenting, seemingly agreeing with that sooner or later the reality will start to bite again in South Africa. The rand may weaken again after perhaps a period of uncertainty around this election.
Well, you look at the overarching trend for the last several years, and it has been, just, a weakening rand. So yeah, I think I wouldn't, again, the thing is, I would agree with you. The only thing that would shift that right now would be an ANC majority, which is, as you pointed out, it's like the chances of that happen is zero, almost. Well, not zero, but very unlikely, right? So,
I noticed USD Max is putting in the higher low, and this pullback may be corrective too.
We have elections there too, huh? End of the week, elections 2nd of June. Elections in Mexico.
Yeah. So S&P's new highs without normally the peso would be scraping the lows in that market relationship.
yeah,
And it's not.
it isn't, but I think you got to see a catalyst. And just looking at the chart, I would say you break the 50 DMA and you might actually get a squeeze here. So
And just one other piece of thought on the markets is look at the Dow chart.
I tweeted
if
that
we start getting new highs in S&Ps and the Dow can't, there's something else for you to consider about being long. I'm not saying short it, but unless you believe like David Hunter, the S&Ps are going to 7,000 and the Russell's going to double, or people. So there still are bulls looking for 6,100. But
and the flip side is, Dale, too. It's stopped right here on the 38% retracement. So if equities do show weakness, you could short the Russell. You might get some bang for your buck in shorting the Dow too.
The Dow's a weak sister. That's what I'm saying. So looks heavy.
Yeah. I mean, yeah, it does. All right. I know it's time for your guest. Is your guest here?
No, Angie isn't here. I'm Forex guest hunter.
Well, you can look for her real quick. I'm going to just, let me just talk to Ryan and Kman while you're doing that. So Ryan, you mentioned, you are thinking PCE, and Timmy Leak said there might be a stronger PCE data, but that would just offer an opportunity to sell into dollar strength if we saw it. I mean, are you seeing it that same way? I mean, if the dollar strengthened after Friday's PCE and we're past the month end stuff, you would just sell into strength if you could.
Yeah, if there's some decent levels, we've been looking at that side for quite a while now on a few data points. Cable looks like it keeps wanting to go higher, whatever gets thrown at it. So, yeah, you got to side with the path of least resistance. So if you get about a dollar strength that isn't game changing, yeah, it's got to be looked at as a fade. But yeah, get the month end stuff out of the way first.
Yeah, and I don't know if you guys have been focused a little bit on gold and silver, but gold I'm surprised as heavy as it is. Actually, I'm surprised it's trading as heavy as it has. It broke this ascending trend line, and we got this like double top emerging. It isn't quite in development yet, or isn't. You can't play that pattern just yet. But boy, I'm surprised gold hasn't recovered more with the dollar weakness that we've seen. Dollar weakness that we've seen in general.
Yeah, great.
Did you find Angie?
She's here.
Oh, she is. Okay, great. Then I'll go ahead and sign off. I want to say thanks everybody. And as Dale mentioned, We are giving away a $100,000 trader funding program assessment to one winner that will, and you'll automatically be in the drawing if you get a semi-annual or annual subscription of ForexAnalytix. So we have our summer sale going on, and we have substantial discounts for our semi-annual and annual subscriptions. Remember, guys, we only do this like 2 or 3 times a year, and we haven't had a sale since the holidays, Christmas, New Year holidays. So it's been 5-6 months, so it was about time for us to do it. So but on top of that, we're gonna have a drawing for a free $100,000 trader funding program account. You'll automatically be entered in the drawing if you get a semi-annual or annual subscription. So take advantage of it. And if you want to try out ForexAnalytix, buy 1 month, get 1 month free. Just the monthly is a great deal. So make sure you take advantage of that within the next week, because when we pull it down and it's gone, it's gone. And then we'll do the drawing in like a week and a half or something. We'll end up doing it here on F.A.C.E, I'm sure. So but thanks everybody. Ryan, Kman, thank you guys. Hope you guys had a nice long weekend. Dale, it's nice to have you back, obviously, and have a great interview with Angie.
Thank you, Blake. Great to be back with you guys. Team, thank
Cheers,
you.
mate.
Kman and Ryan, you guys are like my brothers. So anyway, and you can't disown me. You can't disown me because we're brothers.
We won't want it.
All right. Anyway, let's talk about something that was really a market in despair the last time Angie and I got together, talking about the grain markets. Angie, welcome back to F.A.C.E.
Hey.
The tone has changed.
Yeah.
Since
Yeah.
I think we talked at the bottom.
Yeah,
I'm
I think
not
we
kidding.
did. I was just thinking about that the other day. I was like, when did we talk? What day was it that we talked the last time? Because I think it was near the bottom there.
Yeah, it was near the lows. So you tell me fundamentally what's changed as I, pull up some of these grain charts here. This is probably where we were. I think it was in March, and the corn and the beans looked even worse. So corn was doing this, confirm low. Again, late February, March, we do about a 3-month schedule here, rotation, here were the beans. What has changed? Is it export related? Is it weather related? I know that we're flipping from El Nino to La Nina. Is that a factor as well?
Yeah. I mean, all of it is at this point in time. It's not necessarily demand influenced right now, or demand driven right now. I mean, we have seen some decent thoughts about potential increases in demand as we move ahead, especially in wheat here recently with some of the conversations about reductions in world production. But yeah, I mean, I would say that the biggest thing right now that we're looking at is that global grain production expectations, the best way to put it, are reduced from where they were the last time we spoke. The last time we spoke, it was basically during what would typically be a slow part of the year. We'd already kind of confirmed most of the first round of South American production, at least Brazilian production. We had thought that we were good with Northern Hemisphere production, specifically the Black Sea and some of these other areas. But over the last couple of months, we've had some surprising changes take place. We're looking at, smaller than what was expected to be really robust grain supply. So we're kind of stuck in a little bit of a middle where it's not necessarily something that you could say we need to ration demand or encourage significant gains in price, but we are at a bit of an impasse here where if we were to see some continuation of production problems in the Northern Hemisphere, a continuation of drought in the Black Sea, Russia specifically, some problems in Western Europe with too much rain. And, if we were to see the US and North America have a production issue, then suddenly we're not quite as comfortable as what we thought we were. And so at this point, I'd say we're reintroducing, what would need to be a risk premium into this market as we head into the summer months.
Okay, so wheat is a leader. Didn't give up
Yes.
as much on the downside. And I was telling people to get long before we took out this 50-week moving average, which is a big deal.
Yeah.
And so why is wheat the leader? And I think the fact that it's threatening the 200-week, guys, not the 200-day, is also significant where you have to buy any pullback. Because, when you think about it, this was the invasion, right?
Mm-hmm.
So we got up to what? Was it $13, $14 wheat? It looks like 13.63
Mm-hmm.
down to 5. So call it $8, $8 decline. So
Yeah.
even if we're not entering a new bull market, Angie, uh, isn't it reasonable to think that we could rally $4 off the lows halfway back, take you to $9 beans, $9
It's
wheat?
Yeah, it's exceptionally reasonable at this point in time. I mean, it really is going to be, it's going to have to be led by the cash market, though. That's going to be the thing that you're all going to have to really pay attention to, is what happens when it comes to the depth and the level that Russia is offering. So when I say depth, how much are they willing to sell when it comes to moving grain into the export market, and at what values are you seeing them willing to sell? And so one of the things that we've seen in this wheat market rally here as of late, and you go back to the invasion levels and some of that stuff, it doesn't look near as
Yeah.
impressive as what it feels when you've sat here and stared at, mid $5 wheat for the bulk of the year. But the fact of the matter is, much of this has been driven by fund buying, speculative short covering, and really not necessarily driven by the consumer, the world end user. You've seen Egypt come in and try to get some bushels bought, but they really don't have a bunch of cash behind them to do some additional purchasing. And so there is some questions as to what we could see happen here if you were to see the farmer remain completely unengaged, because right now they don't know what they're going to have from a production standpoint, and they're not
Yeah.
selling a bunch of wheat. And so, yes, the potential is there, but it's going to have to be influenced by, maybe another round of not only speculative short covering, but a consumer short covering, to kind of cover some of their demand for the Q4 period. But it definitely could move us to where you could see a recovery towards that $8 mark, towards that $9 mark. But, first we kind of have
Okay.
to battle the short-term resistance levels that we're
All right.
sitting at and
So
see
I
if we
think
can
we
break out
could,
above them.
yeah, we could pull back maybe halfway to 620. What could be
Mhm.
behind a pullback to 620? Anything that you're seeing
Yeah,
fundamentally that could
the
drive that?
improvement. Yeah, the improvement in the U.S. weather, you are seeing some increase in rain amounts here in the southern plains, and then you're seeing the Western Canadian prairies see some improvement in their weather outlook too. So that could be something that you could see fundamentally kind of pressure the market, and that's one of the things that's weird this year versus the year we moved towards 13, is that we just have a lot of leftover supply still sitting, here in the US in the soft red wheat carry out here in you've got over in the Black Sea and parts of Europe, so there's some different setups, but yeah, it's definitely something to be paying attention to.
Okay, so I'm drawing my bushel basket right
Yeah.
there, Angie.
Yep. Yeah.
Everyone get your wheat chart out and draw your bushel basket there between 620 if it gets there. I don't know if it go to 6 to over a $2 move here,
Hmm.
which means the next could be 320, which would take it to 9.
Yes.
Anyway, that's a strength. Can you explain why beans are lagging compared to
Yeah.
wheat?
Beans don't have the story when it comes to balance sheet adjustments that wheat does right now. Beans, for the most part, the Argentina crop is going to be much better than what it was a year ago, looking at about double the crop size. Now, that sounds huge on paper, but we have to remember that the Argentina crop was half of what it should be a year
Yeah.
ago. So basically we're seeing Argentina return back to normal, and we're seeing Brazil have reasonable production. It wasn't what we saw a year ago. It was definitely reduced. There's still a lot of questions over what we've seen lost in the flooding in Rio Grande do Sul and some of these other places, but from an overall standpoint, if you look at beans on paper, we have a plentiful supply. It looks like U.S.
Okay.
carryout should continue to increase because we're going to struggle to meet U.S. export projections currently. And then we have new crop sales really, really lagging, with an idea that we're going to see a continuation of the trade war with China. And so beans, when it comes down to it and I had a customer ask me about beans the other day, and I straight up said, on paper, on the balance sheet, beans should be trading closer to $10.50 to $11. From an emotion standpoint, from a cash market standpoint, and because they're a protein source, they could touch 13 without even looking back or any real fundamental driver to push them that direction.
Coincidence, important moving averager on the weekly. You're talking about the 50-week, and also I think you're the one that mentioned that it's also being used for jet fuel.
Yes. Yep. There's the renewable diesel. You're looking at, soybean oil. You've seen a significant increase in domestic crush. Soybeans are really one of those things where we use it used to be half and half. Half of them were crushed in the US to make soybean oil, soybean meal, things of that nature. And the other half were exported for other people to do that. And so we've seen a giant leap in US crush demand, which is helping underpin the bean market. But we've also seen a significant increase in used cooking oil imports from China that's undercutting that soybean oil demand. And so we've seen soybean oil really trade pretty violently here over the last couple of years as a result.
Okay, and there's my bushel basket for a buy zone on beans between 1160 and 1180, and you're wrong under 1120. So let's talk about corn. Corn acting a little better than beans. Really, they do. We start getting through 460. There's some upside. Why is corn outperforming beans?
Corn, is going to be heavily influenced by wheat. And so if you look at the corn wheat spread right now, you're talking about a spread difference of what, $2.35, give or take, just quick math, looking at the July. Traditionally, you would see that trade in that $1.30 to $1 range. There's an argument that wheat is a true. When it comes down to it, if wheat is cheap, if wheat is relatively cheap, speaking to corn, compared to corn, or relatively cheap compared to soybean meal as well, because wheat brings with it some protein, wheat will go into feed rations. And so one of the reasons that you saw corn fall out of bed as much as it had over the last year or so is that we had displaced a good amount of corn that was traditionally fed around the world by cheaper wheat. So if you look at wheat trading at $5 and you look at corn trading at $5, most folks are going to look to feed wheat because it does bring with it a bit more in the way of value from a ration standpoint. And so corn and wheat tend to be a little bit lockstep. And so that's one of the things. Corn has started to see some support because of the higher moves in the wheat market. It hasn't kept up simply because its balance sheet similar to that of beans. On paper, we look like we have more than enough corn. But similar to what we're seeing in wheat, the idea of production, or what we will see from a global production standpoint, has shifted much lower here over the last 3-4 months. If you go back and look at late January, February timeframe, a lot of folks were expecting a 61 million metric ton Argentina corn crop. We had big expectations for U.S. planted acreage and U.S. yields and all of these things. And we're starting to see that get trimmed back. The Ukrainian surplus of grain that we had seen kind of pressuring European prices appears to have been used up. We're seeing Spain come back into the U.S. corn market, the Brazilian corn market. They had been buying a significant amount of Ukrainian bushels. And so corn is lagging, simply because similar to the soybean story, on paper, we've got more than enough. We don't really have a significant amount of demand or a demand story that's going to show up to surprise us. And so now we're here to focus on supply. And at this point in time in the year, everyone kind of assumes that we're going to have a decent production season and more than adequate supply. But I give pause just simply because I've watched what the weather has been doing over the last few months here, and I don't think we know what normal is anymore.
Yeah, and I don't think you know what normal in Ukraine is. For the last couple of years, despite all the fears of the grain not getting out of there, it got out of there. But now, with counteroffensives going, and there's a chance Putin takes over Ukraine. Then what happens to wheat prices?
Well, it's something that is definitely super important to watch, and it's been on my radar for a while here for a minute. I mean, I think the biggest thing that you're looking at is not only a transition in the war, you're seeing more of the Western Ukrainian folks being impacted. And I wrote a column about it here a few months back where folks, really had asked me, why is the Ukrainian war having no influence on grain prices anymore? And when it
Yeah.
had come down to it, is it was containment. The war itself was kind of stuck in a bit of a
Right.
stalemate. We weren't impacting the ability to export. We were moving grain into the marketplace.
Right.
We were producing the same amount of corn or close to it grain wise as what we had pre-invasion. But now we're really looking at it to where that's an issue, with Zelensky saying what Ukraine has, 25% capacity to protect their airspace over Kiev. And you've got all of these different things that are happening that really have changed the situation. And so it's another thing I have, my eyes on. Russia will grow wheat. You'll see a decent wheat crop. The biggest influence, I feel like, yes, a wheat would be influenced, but it would be corn that would see the biggest impact if we were to see Ukraine kind of removed from the global market structure, simply
Interesting.
because most of what Ukraine produces for corn is exported. And we're talking, upwards of 17, 18 million metric ton of demand that would be shifted back to the US and Brazil if Ukraine wasn't able to ship at peace. And so yeah,
Like
I
corn
think
calls.
yeah, it's
Really,
definitely something that I'm watching where it gives
go
me
out to
great
the end of
pause.
the year and buy some $5 calls or something. It's a nice
That's
spec.
I truly feel in corn there's an opportunity there that we could see it trade 550 in the next 4 weeks,
Okay.
but also be down
Wow.
to, $4.20 by
Yeah.
October.
Okay. Okay.
So
So we talked about this wild card in Ukraine now. Why don't we throw in one more wild card?
I like
And
wild cards.
this is something that almost every commodity will go up if I'm right long term on the Dixie, which
Hmm.
on the verge of rolling over and breaking down after really moving sideways for a year or so.
Hmm.
Weaker dollar, Angie, what kind of impact is that going to have on grain prices?
Oh, that would definitely help. A weaker dollar obviously makes our grain, makes our exportable supplies more competitive. The US, when it comes down to it, has the highest quality crop with the best logistical capacity in the world. Basically meaning that, whatever you need, we can get it to you at whatever quantity you want and probably can figure out a price that'll work. You know what I mean? And so I think if you were to see the dollar continue to weaken and fall off here, and we were able to kind of step up to where we can say, hey, not only do we have it available, we can ship it and it's relatively competitive from a price standpoint, it's going to be super helpful. I mean, we've seen reasonable export demand even with a stronger dollar. And so to see that fall off and to hear some of the things or to watch some of the things that I'm watching when it comes to production hiccups and things of that nature, to see the dollar drop off, it would make it to where we'd probably see the USDA's export forecast come more into line or be more realistic at this point. Right now, with the strong dollar, and the global competition that we're seeing, the U.S. does kind of take a second or third seat behind some of our competitors, and so it's definitely going to be something to watch and could put a shot in the arm for U.S. demand that's been struggling here for a bit, over the last few years. So we've seen that dollar
Yeah.
strength.
Okay. So the grains have, I think, plenty going for them, and do your fib work, and they do have ETFs, guys,
Hmm.
for trading. You don't have to trade futures, and there's even a DBA, which is an agricultural ETF, and Techrium has a wheat, corn,
Hmm.
beans. So there are ways to play it. So Angie, I appreciate your fundamental analysis. It kind of explains to me what I was seeing technically. And what's interesting about these trade setups now, like I wouldn't reach for wheat, but if this happened, is that down here when last we were talking March, let's see, March, April, May, yeah, it was probably then. Um, there was no technical reason to buy the corn. I mean, it was cheap. There was some divergence, the wheat, but now there's a reason so that if you get a pullback, you've already had the base. It's a little more dramatic there, but Same with beans. You've had two higher lows. So
Mhm.
why not try a break? You don't even have to risk the lows. You could risk the higher lows. And, it was a theory down here. Now it's turned into at least the beginnings, unless it aborts and takes it out, goes to new
Mhm.
lows. That's always a risk. And the same with the corn. So, it's been a long time, 2.5 years since we had bull markets and grains. If you're a commodity bull, they are still definitely one of the most overlooked complexes out there. Don't you think, Angie?
Oh, I would agree. I definitely think there are a ton of short-term opportunities. You said that about if we fail at this level, we could go to the next one. But
Yeah.
the reality is, this time of year, we tend to see at least a bit of support come into play from the seasonals. For corn, we tend to trade higher, at least until we work our way to where we can see what the post 4th of July forecast looks like. We need to see what pollination weather and things of that nature, what we're going to be looking at there. And then for beans, honestly, we'll probably stay relatively supported as we work our way into to August, and corn, or wheat, excuse me, much the same, just simply until we get a better feel for what we're looking at, from a production standpoint, and see more in the way of farmers selling. Probably going to see the market have some solid floors underneath it for a bit of time here.
Okay. So the tincture of time, how things have changed in a quarter from
Yeah,
despair to hope.
yeah.
So, things are looking more constructive, and great interview. I think we're a good team. You run through the markets and I break down some price structure for people. And I think we gave them a real vision of what could be coming down the pike in the
Yeah,
grain
thank you for
markets,
having me. I
Angie.
always enjoy
Yeah,
it.
I learned from you, Angie. So thank you very much for being here. And I guess we'll be talking late summer, early fall, when the drought's in full swing in the grain belt.
When I'm looking at South America and pulling my
Just,
hair out. I can't
yeah,
wait. It's so much
it's
fun.
just I thought I'd end it with a little notes for Pinkert. That's
So,
all.
I
So
like
Angie
it.
Setzer, this is where you find her. You
Yeah.
could go to consusag.net, and she does webinars. She helps people that are actually involved in agriculture hedge their products. So if maybe a good time to with the dollar possibly breaking down, to have dollar hedges, and grains could be a pretty good dollar hedge. You can't eat gold, right?
No.
So anyway, that's a wrap, and an asset class for you guys to consider. Thanks again, Andy, for being with us.
Thanks for having me.
All right, my trading warrior sister, Angie Setzer, find her on X at Goddess of Grain. She doesn't ask for you to, bring gifts. Just DM would work. And that's a wrap for me, everyone. Good to be back in the saddle. And we'll see everyone for Turnaround Tuesday. Adios. People are thanking you. Patrick says thank you. Sinatra. So follow Angie if you want to know about that stuff that grows out of the ground. And don't just count your ears. I'm not talking about the ones on your head either. Count your blessings. Adios. Oh yeah, turn around Wednesday, George. See, I'm still on my head still